Hello, fellow investors. Welcome back to Chat ETF, your go-to channel for insightful discussions on exchange-traded funds. I'm thrilled to dive into today's topic, where we'll be exploring the nuanced world of ETF liquidity. The landscape is evolving, and understanding the factors that truly influence liquidity is more crucial than ever. In this video, we'll be unpacking the insights from a recent Jane Street report, challenging assumptions, and providing you with a comprehensive guide to assessing ETF liquidity. Before we jump in, make sure to hit that subscribe button and ring the notification bell, so you never miss out on the latest updates. Now, let's get started. Exchange-traded funds, ETFs, have become a staple in the investment landscape, offering investors a diversified and cost-effective way to gain exposure to various asset classes. Traditionally, assessing an ETF's liquidity was often tied to metrics such as secondary market volumes and assets under management, AUM. However, a recent report by Jane Street challenges this conventional wisdom, suggesting that larger ETFs are not always more liquid. The temptation of thin liquidity, challenging assumptions. In the comprehensive report titled The European ETF Liquidity Landscape, Jane Street not only delves into the intricacies of exchange-traded funds, ETFs, but also challenges a prevalent assumption in the investment world. The report highlights a common temptation within the financial community to hastily equate small secondary market volumes in Europe with thin liquidity in European ETFs. The conventional belief holds that if an ETF exhibits limited trading activity in the secondary market, it must inherently be less liquid. However, Jane Street's analysis sheds light on the potential pitfalls of succumbing to this oversimplified view, emphasizing the need to scrutinize the nuanced aspects of the liquidity landscape. The conventional assumption, as outlined in the report, implies a linear relationship between secondary market volumes and an ETF's liquidity. It suggests that the more actively an ETF is traded on the secondary market, the more liquid it is deemed to be. This simplified perspective, while intuitively appealing, risks misleading investors and may inadvertently overshadow crucial nuances in the complex world of ETF liquidity. By challenging this assumption, Jane Street prompts investors to reconsider their preconceived notions and adopt a more discerning approach to evaluating liquidity. The report underscores that measuring an ETF's liquidity goes beyond a mere assessment of its secondary market volumes. This shift in perspective urges market participants to acknowledge the multifaceted nature of liquidity and the various factors contributing to an ETF's overall trading dynamics. The danger of adhering to the oversimplified view becomes apparent when investors make decisions based solely on secondary market volumes. If the assumption holds true, smaller secondary market volumes might be misconstrued as indicative of thin liquidity, potentially leading investors to overlook investment opportunities or, conversely, to underestimate risks associated with seemingly more liquid ETFs. Jane Street's analysis encourages investors to embrace a more sophisticated understanding of liquidity by exploring additional dimensions. Market participants are urged to consider the role of market makers, bid-ask spreads, and the liquidity of underlying assets within the ETF. By doing so, investors can construct a more holistic view of an ETF's liquidity, avoiding the pitfalls of relying on a single metric that may not capture the complete picture. In conclusion, Jane Street's report serves as a call to action for investors to resist the temptation of accepting a one-dimensional view of liquidity based solely on secondary market volumes. By challenging assumptions and emphasizing the need for a nuanced perspective, the report guides investors toward a more informed and comprehensive evaluation of ETF liquidity in the ever-evolving landscape of financial markets. Beyond secondary market volumes. Jane Street argues that relying solely on secondary market volumes to assess liquidity oversimplifies the complex dynamics of ETF trading. While these volumes provide a snapshot of trading activity, they may not capture the full picture of an ETF's liquidity. The report suggests that investors should delve deeper into understanding the underlying factors that contribute to an ETF's liquidity profile. Factors influencing ETF liquidity, a nuanced perspective. In the intricate realm of exchange-traded funds (ETFs), assessing liquidity requires a multifaceted approach that goes beyond conventional metrics. The following factors play a pivotal role in shaping an ETF's liquidity profile. Market maker activity. The involvement of market makers stands as a cornerstone in determining an ETF's liquidity. While there's a tendency to associate larger ETFs with more robust liquidity due to increased market maker participation, Jane Street's report challenges this assumption. It highlights that the sheer size of an ETF doesn't guarantee optimal liquidity. Contrary to popular belief, smaller ETFs with efficient market maker activity can exhibit noteworthy liquidity. This insight challenges the conventional wisdom that liquidity is directly proportional to an ETF's size. Bid-ask spreads. Bid-ask spreads offer valuable insights into the cost of trading an ETF. Narrow spreads suggest lower trading costs and contribute to higher liquidity. Jane Street's report emphasizes the importance of considering bid-ask spreads as a complementary metric in assessing liquidity. Investors are cautioned against solely relying on metrics such as assets under management, AUM, or secondary market volumes, as bid-ask spreads provide a more granular understanding of the liquidity landscape. Underlying asset liquidity. Often overlooked but crucial, the liquidity of the underlying assets within an ETF significantly influences its overall liquidity. Even if an ETF boasts substantial AUM, the liquidity of its underlying assets is paramount. If the assets held within the ETF are illiquid, it can adversely impact the fund's liquidity. Investors are advised to delve into the ETF structure and meticulously assess the liquidity of its underlying components. This consideration ensures a more comprehensive evaluation of an ETF's overall liquidity, beyond the surface-level metrics. By recognizing these nuanced factors, investors can construct a more informed and accurate understanding of an ETF's liquidity. The interplay of market maker activity, bid-ask spreads, and underlying asset liquidity paints a comprehensive picture that transcends the limitations of singular metrics. This approach aligns with the evolving nature of financial markets, where a more sophisticated understanding of liquidity is imperative for making well-informed investment decisions. As investors navigate the ETF landscape, embracing this nuanced perspective enhances their ability to discern between different funds and make strategic choices that align with their investment goals. Conclusion. While AUM and secondary market volumes offer valuable information, they should not be the sole metrics guiding investors in assessing ETF liquidity. The Jane Street report serves as a reminder that a nuanced understanding of market dynamics, including market maker activity, bid-ask spreads, and the liquidity of underlying assets, is crucial for a comprehensive evaluation. Investors navigating the ETF landscape should resist the temptation to generalize liquidity based on size alone. By incorporating a multifaceted approach to liquidity analysis, considering the various factors that influence trading dynamics, investors can make more informed decisions and better navigate the diverse landscape of exchange-traded funds. And there you have it, folks. A deep dive into the intricacies of ETF liquidity. We hope this video has equipped you with valuable insights that will empower your investment decisions. If you enjoyed our discussion today, don't forget to give us a thumbs up and share your thoughts in the comments below. For more in-depth analyses on ETFs and other investment-related topics, stay tuned to Chat ETF. Hit subscribe and join our growing community of informed investors. Until next time, happy investing!